So my name is Seun Phillips. I'm with the Michigan Economic Development Corporation. Welcome to Show Me the Money. Show me the money. So today we're going to be talking about money, of course. So with the Michigan Economic Development Corporation, it's the economic development arm for the state of Michigan. And in particular, we're focused around the future of mobility called PlanetM. And with that, we work with startups, we work with corporates, we bridge the public and private sector together. And one of the things we're looking to do is we want to scale our POCs, and these are the people that help with scaling. So if we could just start with your name, where you're from, like where are you based, and probably what type of investments do you guys, what's your sweet spot? Where do you focus on?
Sure. Yeah, so I'm Patrick Jameson. I'm from APTIV, based in Boston. And at APTIV, we're a leading technology company developing advanced safety systems for OEMs across the world. In terms of where we typically like to invest, we like to come in later. We're really Series B in later stage. We like to come in after there's been a POC and kind of a pathway directly to commercialization where we can come in and help influence that conversation and get the kind of buzz around that company into the OEMs.
Perfect. Nacho?
Shalom, everyone. It's a great pleasure being in Israel again. My name is Nacho, and you heard it right, like the crisp that you can find in some Mexican restaurants. I'm the managing director for BP Ventures in Europe, and that includes Israel, where we have a person on the ground. In BP Ventures, what we're trying to do is invest in companies that help us create a new BP for the future, companies that are transforming and decarbonizing the energy industry. That involves mobility, bioproducts, carbon reduction technologies, digital, and I'm leaving one, power and low carbon. We got access to a pot of $200 million a year for all those areas. We don't need to spend it all, so we're always very selective who we work with. And it's a pleasure to be here. Thank you.
Tal?
Hey, good afternoon. My name is Tal, and I'm with Drive and NextGear Ventures. Drive is I'm based here in Tel Aviv, and Drive is an innovation hub that is based here in Tel Aviv, which specialized in helping Israeli startups and our partners. Our partners in Drive, APTIV is one of our partners in Drive. We basically help our partners and our startups collaborate and create POCs. In NextGear, it's a fund that mostly investing in Drive startups. And our sweet spot in NextGear is the early stage, sometimes very early stage.
Malgorzata?
I'm Malgorzata Wiklinska, and I'm with one of the world's biggest automotive and industry suppliers based in Silicon Valley. I'm responsible for business development, partnerships, and R&D operations for autonomous driving. And our sweet spot, there is no sweet spot. Everything is possible, but there's one clear rule. We are not a classical venture capital. We only invest in strategic, relevant venture opportunities.
Shiva?
Shiva Kumar. I'm a senior vice president at Jefferies. If you don't know Jefferies is an investment bank. We help clients on raising capital, whether it's a private placement, IPO, or debt. We also advise companies on M&A, which is kind of buy side and sell side. I focus on mobility tech specifically, which is essentially, we go into detail about kind of any technology that moves people, packages, and food from point to point B using cars, drones, and robots. I just want to go and highlight a couple of transactions we just did. We advised Kareem on its $3.1 billion sale to Uber. We took Lyft public. And then there is also some other transactions that were in the newspaper about Apple buying an asset. So a lot of deal momentum. Happy to share my thoughts here.
All right, so let's get into the questioning for Show Me the Money. All right. So this group, where do you see the opportunity around mobility, or even what type of technology do you particularly see that there's great opportunity for? Starting with Shiva.
Thank you. In terms of the opportunities, I feel, so there are two different sects. One is on the B2C, and there is a B2B2C. I feel B2C has adequately penetrated and there is a law of large capital that will prevail. When it comes to Israel, the companies here, they're focused on it, which is essentially called a B2B to C, the components, the AI, deep learning that cuts across the ecosystem will actually prevail, or at least in the next 12 to 36 months, where the financing will happen, well, the M&A is going to happen. So specifically, I would say anything related to the consumer services, consumer experiences in ride-hailing app space is going to be extremely important because there are lots and lots of riders who are sitting in the back for 35 minutes, 45 minutes during the daily commute, and that time, if you can capture that and into monetize into something a little bit more productive, I think you have a business to run.
Malgorzata?
Technologies.
Yeah.
Opportunities. Well, if I look at our company, there are many opportunities, but at the end of the day, the question is what brings back the money? Show me the money is not only showing it to the startups, it's also showing us the money in terms of return on invest. And right now, I see a big trend in terms of new mobility opportunities, including autonomous driving, but not only focus on the technology, because I think the market is quite saturated. And right now, I think we need to figure out how to deploy it, how to bring it to the market, and how to actually make money with it. And with making money with it is a good example would be, how do I integrate an autonomous vehicle seamlessly into a transportation app that is not called Uber? Because Uber only organizes to deliver a vehicle, but what's with the other opportunities that are around? So you see, it's not that easy, because I think the critical point now is everyone talks about one area, a little bit e-mobility here, a little bit safety there, LiDAR, radar, and we all go crazy, and then we come to Israel and look at it. But what I miss is the picture, and what I miss is the big business that we can make out of it.
So I will divide this quick answer to two. Basically, the last 5 years, you have a situation by which the void was filled by setup of sensors and AI, and it got to a certain plateau. So on the technical front, it got to a certain plateau, but there's also more clear, vivid gap of what is missing. So I think on the technical side, technologies that are going to be deep technologies, going to solve this last 10% that is missing, are going to be a big opportunity. I'll give you an example. We have in our portfolio a company called Fortelix that takes to a different expertise how to envision the new data that has to go in order to complete a safe autonomous vehicle on top of existing autonomous system. On a different bucket, you look of opportunities are buckets of investments or services that are on top of existing platforms. Okay, so for example, right now you have a pretty nice picture of the connectivity. Many cars are connected. Networks become more reliable, more and more cars are being connected. So the opportunity there is to provide services on top of this connectivity layer. An example here I can tell you, another company we have in our portfolio is MDGo, that uses this connectivity infrastructure to deliver real-time trauma analysis to EMS. So these are the two buckets I believe that are providing opportunities.
I think for me the opportunity is not only technology but also business models. Is looking at a traditional problem with new lens. Not necessarily that I need to invent something, but maybe I can just make a small step change in something that has already been invented that we may have been using for years and suddenly has a new application or solves a new problem. So I'm looking at that uniqueness of thought that changes the perspective into what we do. And there's a few companies here that I've already seen that quite unique, but is that not everyone is trying to deploy electric scooters in the street. There's someone with something different, right? And the second thing I would say is, how protected is that secret source? How unique, how difficult is it for someone else to replicate, right? You have created a new step change, but is tomorrow going to be, everyone going to be doing it, right? So.
Yeah, and I think, I agree with all the panelists. I would say in addition, from APTIV, we think I think there's a balance that needs to be struck. I think, when we think about our portfolio, we're investing in nearer term opportunities. So when we think about NCAP regulations coming in, we deployed capital into a company called APTIV in January, actually led that round and, helped facilitate that company pivot into auto, bringing our expertise, but also our integration capability and really introducing them into the market. So we see that as more nearer term wins for next generation technologies where we're having this handoff between man and machine. We need to make sure that that's happening in a seamless way for in-cabin sensing and driver state monitoring. And then we're looking forward to the future as well. As people know, we purchased Automatica several years ago, which allowed us a good capability. We strengthened that with our acquisition in Autonomy in 2017, to the point where now we actually have self-driving vehicles on the Lyft network in Las Vegas. If you're fortunate enough to be there, please, we urge you to go try it. There's work to be done, but we believe we're a top-tier company there. We're looking for partners to help us realize that vision of bringing self-driving cars to around the world.
All right. So just from the audience, how many of you have started a company or currently have a startup? Raise your hand. All right. So these are the people that are looking for the money in particular. I know you guys don't only focus on startups, but what's your recommendation to the startup that is seeking funding? And anyone can start. What would you recommend to them?
I can start. So typically we focus on companies kind of Series B onwards, so sort of like raising $50 million plus. Kind of the series does not really kind of jive with the capital raise nowadays, because if you see Pony.ai raises $100 million in Series A, whereas some other company with Series C or D might be raising $20-25 million. Typically, when you're thinking about raising capital starting at like $50 million plus, you really have to have a solid commercial contracts, because the way the investors think about it is there is initial first two series are where there is a business model risk or the product risk. And then there is a Series C onwards is the market risk. So they want to make sure that when they're raising $50 million plus, you need to have certain amount of commercial contracts, whether it's sort of the technology has been proven out, you have a certain number of engagements, and there's a path to generating revenues in near term.
Any other advice?
Yeah, I'll just add, I think for earlier stage companies, I think it's really important that you know who you're taking your money from. You want to make sure that investor is going to have the same patience, has the same time horizon, that you're thinking about the market in the right way. And I think, maybe some of the biggest struggles I see when I speak with startups at maybe the seed or pre-seed stage is, I get that it's pretty early and, the market's changing, but, be thoughtful about how you're articulating your go-to-market strategy. Give that vision to the people who are hearing the presentation. And while the technology is of utmost importance, it's just as important to have a clear vision for how you're going to bring that to the market.
I would say be very clear on what problem you're solving. Be crystal clear why you're in business. Be crystal clear why you are working on the project that you're solving. Second thing I would say, have a good business plan. Make sure that you know your team, you know your skills, as you said, Patrick, who you're getting money from, right? At what point do you approach strategic investors, for example, BP, to ask for money? And also be ready to pivot. The solution that you have today may not be the one that works in the market, so be ready to move it to something else. In terms of stage, seed, Series A, Series B, if you like the technology, if you like the company, for an investor like BP, there's no difference. We have done 2 investments in Israel, 1 Series C and 1 seed investment. And both are companies that are very clear on what they're trying to achieve, and that's what makes them interesting.
So, we can talk about it a long time, but this is a big question, But in essence, for me, I'm an early stage investor. We don't expect to have a business plan, okay? Because I know this business plan is going to change many times, okay? For a really early stage. But what you expect to have is some sort of transparency. and what you know and what you don't know, and what you want to find out, and to see if it all makes sense. You have to have a story that makes sense. And the story can be really initial, okay? Depends if it should address a real need, and if it's addressing a real need, maybe there's something there.
I will make one more point, actually. Sorry. You get that? Go ahead. I would just say, don't be greedy. That's the number one point. I mean, I would say if you can raise capital. Don't care about the valuation when you're starting off, because you have a lot of other harder problems to solve. So raise capital from parties that you think are interested in your business, going to be long term with you, will be in your trenches when the things will not go right, and just make sure that you have enough capital for the next 24 months.
Yeah, I focus. Yeah, and probably something that not everyone likes to hear, but can you please stop dreaming? The reason why I say that is I see so many startups in the early stage where you ultimately know this will not work out because there's no market need. I love dreamers, but at the end of the day, well, we don't talk about SpaceX usually, and I think that what I miss sometimes is startups that really find a solution for things that are relevant. A clear application is validation for autonomous driving. That's a big problem, and we need a solution for that. And I would wish that startups would really focus on real life problems and not on flying cars. Although I think that's fun for movies, but I'm not really sure if this will really hit the road.
What do you guys think about that?
Well, I hope flying cars don't hit the road. I don't completely agree. I think being a dreamer is part of being an entrepreneur, right? So I want them to aim high. Yeah, then be realistic, but we'll bring them a little bit of realisticness, let's say. But I think I want people to be aiming high, really. Then when we discuss evaluation, we'll have to agree something, but.
You don't have to agree.
You don't have to agree. That's the truth, right? So, starting with Malgorzata, some of you are VCs and corporate VCs. Enlighten us on your strategy when you're looking at the strategic value versus the financial value in making some of the investments that you're doing. Just enlighten us on how do you take that approach?
Yeah, we focus on strategic investments only. We are not a VC, as I said in the beginning. We do not perform financial investments at all. And every single investment has to close a technological gap or enrich our product portfolio in order to be able to fulfill our strategy 2025, or we call it the next generation mobility strategy. If there's no fit, then there's no investment. And to give the answer to this question is fairly easy, and we do that within a week, so there's really no big deal. And to give examples, for example, we invested in a company a certain amount of stake in the company is called ADAS Engineering. The reason why we invested in ADAS Engineering is purely to gain know-how and to have some kind of an acqui-hire approach to fulfill the needs from the customers in terms of autonomous driving. And we also invested in a company, a majority stake, which is called To Get There, which will enrich our new mobility approach and will also enable us to enter the market much faster instead of, just doing that with a startup, because they already have a big customer base in Dubai and Shanghai and Netherlands, which gives us a bigger opportunity to hit the road.
Hey, you're going to say something?
Yeah, I was going to jump in. I think we have a pretty aligned vision. I think at APTIV, we're pretty particular about who we invest in. They have to fulfill a strategic gap. I think as we think about our portfolio today, there's been LiDAR companies, there's the connected vehicle themes, there's the in-cabin sensing. So there has to be, I think, the strategic fit. Now, I think, our shareholders would kill me if I said that the financial returns aren't important. I think we make sure that there is even in the most conservative, we want to see a return. But I think our aspiration is probably not as high as potentially some pure financial investors. But we run the numbers, we make sure that we're comfortable with the valuation, but we're more sensitive to it fitting in our portfolio.
I think for BP is similar, but I want it all. I want both. So I want the financial return and I want the strategic return. When we invest in a company, we know that there's some strategic alignment. So we will work with the company and maybe deploy in BP assets or maybe help them build a plant for whatever they're doing. And that's the strategic value for us. But of course, the strategic value will not be there if the company doesn't do well. So you cannot have a strategic value if the company just crashes 18 months later, right? So we need to be very careful with the strategic alignment, and then the financial return, we need to work very hard with the company.
So in line with that, as you think about making investments based on the immediate versus the future potential, what's the balance that you guys create where, as you know, right, these companies are a great idea, but the business model is not strong? How do you create that balance for the different investments you're making, starting with Tal?
So, there are many unknowns when you start the journey, and when you start particularly when we invest in a really early stage. So, but you can basically, again, here also divide into rough two groups. You have some startups that are really starting from a purely technical or technological innovation that can address a very specific need, a gap that is existing in current schema of the market. And you can almost predict how this path is going to evolve and almost predict the size of the exit or the growth of the company path. You take those aside, and then you have more of some game changers potential, some business model, different service offering that are offering alternative maybe to strategic opportunities. Those can grow and get really big and many rounds of funding. So I would really separate these two into two buckets. That's the way we look at that. It's all good because we invest in the early stage. We have to calculate the stake we take, and we have to foresee and predict the growth for us to have an ROI. Unlike my embarrassers in the panel, for me the paramount impact is the money ROI, the financial ROI, which in our domain, what's nice about this market is most likely there's a very strong alignment to somebody else strategic, so to speak, ROI, because the end plan is an exit. Most likely, say maybe an IPO, but most likely not. Most likely an M&A, but somebody that looks at this strategically. The question is it going to be on the early side to fill up a technical gap, or is it going to be on the later stage to be a game changer, moonshoot?
Yeah, I would just say to add on to some of my previous comments, for us, we try to de-risk it. I think one, we're laser focused on the leadership team, the core technology, the moat that they have around that, to make sure that there's multiple shots on goal for whatever problem they're potentially solving. And then I think another way that we try to get comfortable with the direction that they're heading is, when we do invest in a company, we also are signing in parallel to that a commercial agreement that's going to get us comfortable that we're driving the right way, we're on the same page, we have the right time horizon, and so there's no surprises, down the road, in the direction that we're heading.
Yeah, I would say when you think about a company that has got $100 million plus sales, you could pretty much replace the management team, the CEO, with someone else who is equally seasoned, might not be the same industry, and that company would probably run on cruise control or actually grow kind of similar rates. But when you start thinking about early stages, whether Series A, B, C, what you're really betting is the story and the founders, essentially. And it's incredible how many times, and I actually worked in a startup before we got acquired by Intel. I worked in Intel for a number of years, and I did investments for them as well. It is incredible how many times, if you go back 2 years later after you have started a company, go back to look at the napkin where you actually drew your business plan, and the changes you have done, the pivots you have made is incredible. I mean, companies go through the evolution, but what remains is the grit of the founding team to make sure that it's successful, and that is what the investors look for. Can you articulate your story clearly? Do you have the grit or the passion to take it to the next level.
All right, so in a couple minutes, I'll open up the stage for maybe 1 or 2 questions from the audience. So think about if you do have a question. For this group, let's make this fast. What do you do to source your deals? How does this group get in front of you, or how do you look for your investment opportunities? What does that look like, and how does it happen? What's the secret sauce?
All right, I'll start quickly. I know we're running out of time. Well, sitting alongside me, a great partner of ours here in Israel, Drive. We've been with them from the beginning, and they bring, through their Fast Lane program, which is their flagship program, to bring kind of companies pre-seed, into getting looks from strategics like ourselves. We find that to be extremely valuable. And then I think also, we look to the networks that we have, personal relationships. Shiva, we speak once a month about what's on the horizon. So I think it's networking, but it's also strategic partnerships with folks who are helping to further the ecosystem.
They come all over the place, from BP Ventures, from events like this, from the business units. We have a mobility unit. We have a few representatives here today. And they're scanning the market, and they know what's going on. So when there's something that we think we should be investing, they bring it to us. And also from the relationships that we have in the industry, that we have a global team. We have people in San Francisco, in Europe, and in Asia. And we're always looking at new companies.
Yeah.
So NextGear and Drive is really, this is what we specialize in. We have a mechanism that provides value to entrepreneurs, and we provide value to our partners. And in NextGear, we just help the early stage startups that we feel have great potential in investment. So through the partnership between our corporate partners and the startups, we find opportunities.
Malgorzata?
Everything was said.
All right. Shiva, anything else?
I would say the conferences like this, I'm organizing a Jefferies Mobility Conference on Thursday. So the conferences, I would say we also have kind of the detailed database where we kind of keep track of the companies, whether it's seed, Series A. We make conscious outreach. Obviously, we have a pretty close relationship with the VCs. And then over time, the institutional relationship in general with the larger communities, we get a lot of inbounds.
All right. Is there a question in the audience? All right. So as you guys think about your most successful deals, right? Think about the deals that have gone very, very well. What were the key characteristics that you found that deal to have, or these the things that seem to be common that has led you into great deals?
Yeah, I'm happy to start. I mean, I would say it's strategic fit, but it's also a cultural fit. I think it goes unsaid quite often that the integration of a company into your existing, the train has left the station and they have to hop on board. Getting that cultural fit right and being thoughtful about how the integration is going to play is just paramount. And so I think some of the most successful deals, whatever the size has been where we've been thoughtful about that and taking the time to get that right.
Similar for us. For us is strategic fit and then the cultural fit. And strategic is making sure that BP Ventures is going to make the investment, but also the business unit that has to work with that startup is completely on board. That there's a relationship manager that company can call to, because I'm not going to be an expert in everything. So they need to be able to talk to the business unit. We bring more than the money to the companies. We bring a relationship, we bring customers, and we bring a coaching of the startup, let's say. So they need to be able to pick up the phone and use those connections. The investment that we have, for example, here in Israel, in StoreDot, they are in a monthly contact. I have a monthly meeting with the mobility unit just to see how the business is progressing. So,
15 seconds each. Go ahead.
So early stage is really what you can retrospectively look, this ability of the entrepreneurs and the people skills. As Shiva said before, I mean, I think that this is super critical, obviously, in startups, but in early stage, you don't have too many indicators. That's the single most important indicator you have. And if you retrospect, look at that, that's the differentiator, the person.
Again, everything was said, but I would add one more thing. I think if you make an investment, especially when you look at the investments that I've made in the past and is still performing, it's strategic fit, yes. It's cultural fit, depends. and it's also how can you develop a completely new market potentially, or how can you increase your market share?
Okay, I'm going to switch because I've
You just have
two
7
lightning
seconds.
round
There you
questions, starting
go.
with Shiva. If I was a company, I would focus on, finish the sentence.
Focus on people.
People. Margorzata, what would you focus on?
People.
People,
Mobility.
mobility.
Story.
All right.
I would say people.
All right, last question. The one common mistake that I see companies or startups making is
Lack of a clear vision.
Nacho.
Lack of clarity, too much waffle, and not enough focus.
Ooh. Tao.
Fall in love in the product.
Dreaming too much.
Comping against Mobileye in Israel.
All right, so our time is up. Thank you very much. You'll see them here. And the Jefferies conference is on Thursday. I'll be there as well. Thank you all.